made money in the IT boom over the last decade. So since that story is dwindling, what do you see as the big story over the next decade?
I'm still thinking about it, and it's important to think about it and, get it right. These things don't happen overnight. There's a lot of thinking that goes behind it. So I don't have a view what sector will dominate for the next year or 5 years. It seems so far that credit-led businesses will do well, which is your NBFCs and all that. But I'm not personally a believer in credit businesses.
Have you invested in any of the NBFCs?
No, I will not. Because my belief is the business models over the long term for most NBFCs are generally broken. I mean, there will be exceptions here or there for sure, but here in this business, the profits are always front-ended, and the losses are always back-ended.
Yeah.
So when you give out a loan, it won't turn bad next quarter. It will turn bad after 4 or 5 years. So you will enjoy the fruits of that loan for the first 3 years. So I think these stocks will run. They will do very well. Problems will come home to roost much later.
Okay, the stocks have already rallied quite a bit. So you think that investors have missed the bus in that sense?
I think they have rallied a lot, and I think in some senses they have missed the bus. But I think the momentum itself will propel them a bit higher. Okay. But I'm not a believer in that business, so I'm not going to be buying it.
Okay. You've made a lot of money in the past in some of these stories that have seen a turnaround. So Tata Motors, for example, you bought it when it was a loss-making business, and now it's turned around quite a bit. Do you see a lot more opportunities in these turnaround stories?
It's more difficult now. You need a good solid bear market for that to happen. And I don't see that happening right now, unfortunately. On a macro basis, Brazil was one such trade, okay, where it was a complete turnaround. It's up nearly 100% in dollar terms this year, in a matter of a few months' time. So, and I caught that trade. We bought it for clients as well. But on a stock basis, I'm finding it harder to find that. But there are still names around. I mean, not to say that they are not.
So what names are you thinking of?
I can't. Okay. Even if I utter a word, the whole trade is over. So
you've not been a big fan of banks, but now we're seeing a lot of the stresses in the banks reduced to a certain extent. ICICI Bank, for example, with the SR, Rosneft deleveraging. Is this a space that you would touch at all, PSU or private?
See, look, there are two problems in banks, and people are focusing on the first one, which is a reduction in the NPA cycle, which may well be true. Okay, but what after that? What about the growth? Where are they going to go out and make new loans? On the corporate and the industrial side, this is a dead patient you're talking about. There is no capex cycle at all. And you talk to companies all day long. Who's going to put up huge amount of capex? Nobody. So fine, the problem of the hemorrhaging of money by way of bad loans may well be tapering down. But I'm going to buy something not because you're cutting your losses. I want to buy something because I should see profit. Profit will come from growth. But where do you see growth coming in the lending book?
So what is your basis of this 10% growth that you see from now over the next 1 year in the markets? Because if there's no leadership from technology, there's no leadership from banks, where do you see leadership emerge from?
I think the leadership will emerge from, there are two things here. One is the autos look good. I think they are still very strong, and they will keep rallying higher in my view. Second, the 10% or more could simply come on account of lower rates and lower bond yields.
Okay.
So don't forget that markets are a function of growth and the cost of capital. So you may not have great growth, but the cost of capital declines, then the same growth looks more attractive. So you are already at 7% or 6.7% bond yield. In my view, they can go a lot lower. Okay. That itself will propel your markets higher. Okay. In fact, the very fact that markets are up 10% in the last 12 months without any earnings growth tells you that there has to be something else driving it, right? And that something else are lower bond yield, which were 8%. Now they are 6.7%. They could easily be down another % or so. Okay. That's what is going to drive the market.
And